Hello subscribers, today is April 16th, 2021 and this is market recap for MasterChartsTrading.com. As always, please don't forget to hit the like button, subscribe to this channel and share this video with others. New records for stocks again as short squeeze continues. I'll explain what that is. And the really good example I found for Docusign and how to think about trend trading and how to just visualize the trend trading. Junk that so far hasn't made a new high, so this is a divergence with stock. We'll examine that. We'll look at investment grade corporates, which have, I think, entered a bear market, so that's not a great sign in general. And treasuries did bounce a little bit, so interests are coming down. I'm not 100% sure what's happening with dollar and gold interplay. We'll try to figure out what's in the cards in the future. And oil really all of a sudden, narrowing of a trading range, so we need to be watching oil quite closely now. And Ethereum also hit a new record. As you know, I have two paid letters, and oh, excuse me. That's my other thing. So I have two paid newsletters. One is called Elite and one is called Speculator, and I'm going to cover those stocks in a separate members only video, so you can see there's quite a bit there. So without further ado, let's get right to it. First of all, I am using this green, blue, red and yellow line. These are my proprietary trading indicators. You can look them up by going to MasterChartsTrading.com, and you can register and I can open the door for you on TradingView.com. So once you sign up, you'll be able to have the same indicators, these lines on your chart. Pretty much I use them exclusively to trade and make decisions on trading and things like support, resistance and all that, and I'll show you in just a second how that works. So overall right now, you can clearly see new records. This is basically what's called a short squeeze. I think I already explained it. So let's again, I'll just give a quick example. So let's pretend that back on the 18th of March, when a new high was made, and you're like, oh wow, look at this red candle, maybe this is a bearish engulfing. You're not wrong. There's the 18th of March candle. Maybe it's an outside reversal, so like the entire red candle is covering the entire previous green candle. But as I never get tired of saying that if there is new record highs, we don't really know when those record highs will stop. And so let's pretend you for some reason decided to sell it short on 18th of March here. Obviously I didn't do it, but let's say you did, and you're like, oh cool, I made a little bit of money. But then literally a few days later a new high was made, and let's say you did short it on 18th of March. Overall you would have been really nothing would have happened. You would not have made a lot of money here. And additionally, on the 26th of March, but definitely on the 1st of April, and it's no joke, a new record was made. And at this point, let's pretend that when you shorted it here on 18th of March, you put your stop above the recent highs. And at that point, the recent highs were on that same date. But then once the new high was made, you're like, okay, my stop was hit. I need to cover my short. So what do you do when you cover the short? You buy on an open market. You buy a security on an open market. So in this case, you will be buying to cover your own incorrect bet. And this is what's called a short squeeze, and you can see it just squeezes people out. If you have a short and then new high is made, more people will cover their shorts, more new highs. So it continues until the balance of some sort is reached. But as I keep saying, it's very, very difficult, basically impossible to say where the top is, and vice versa. If the stock is falling, it's very, very difficult, if not impossible, to say where the bottom will be. So when we do the trend trading, we only look at a one point of view. So back in April of 2020, our breakout occurred. So what happened when the breakout occurred? A stock, in this case S&P 500 futures, closed above the support resistance. In this case, the blue line. It is actually marked by the blue line. Again, these are not drawn in. These are mathematically calculated. So let me try if I can see if I could try to. Yeah, so it's not available. See, okay. So if we do a replay, we can see that at the time we didn't know the future, obviously, and so we were making the decision based on the data available. So at the time of entry, back in April of last year, the stock looked like this, and we didn't know what's going to happen, obviously. So we bought at this time and we set in the position, and it just kind of continued higher and higher and higher. And again, your stop is at the blue line itself, so you're going to continue to trail it higher and higher, and know that there is really no way to know when the stock will reach the top. The way things are going, we just broke above 4,000 for S&P. I think maybe we'll see a pause, but overall, clearly it's in an uptrend. So very, very difficult and dangerous to sell short right now. QQQ, so there's NASDAQ, also was a little bit, it was dragging a little bit, whereas S&P, notice that from February into March, it was like a very small drop. QQQ from February into March was a significant drop, and notice where it got down to. It got down to this green line. So this green line just means, weak support. It's not, it's decent support, but it's just not very strong. My stronger support is at the blue line, and this is where I normally buy. But notice that this time we didn't even come down that far. We just stopped at the green line, and this is it. This is just shows you how strong the market is. And notice that the breakout occurred back in April of 2020 for NASDAQ, and it just continued, and occasionally it would touch the green line, but overall it just keeps going. So we will obviously continue to look for buying opportunities, which is what we've been doing all along. We just don't really like to buy at the green line. I like to buy at the blue line, and I'll show you a few examples in a few seconds. Here are small caps, slightly underperforming. So if NASDAQ and S&P made a new record, small caps haven't yet made a new record. It is very likely that they will make a record because of the correlation between the different stock funds. So for small caps, very similar way to think about them is once the security closes above the blue line, in this case this happened on 27th of May of 2020, we think about buying, and we buy when the security comes back down towards support resistance, blue line, and then we just buy it there. So latest opportunity was about 25th of September, and that was good for a over 60% gain. So very easy to visualize. You can see how clear it is. So this is the reason why my subscribers appreciate the way I trade, is because it is extremely clear. And people like to confuse themselves. They can put on a whole bunch of indicators, and then they would put on volume and a whole bunch of different indicators like MACD and RSI and other momentum indicators and blah blah blah, and there's a ton of them out there, but overall you don't really need that many. In fact, I use one. This is the only thing I use. Occasionally, rather, I also use what's called ATR, average true range, but it's more to calculate my target. But as far as the trading itself is concerned, this is what I use, just these 4 lines. Okay, and here's an example for Docusign. So I wanted to show you how, generally speaking, I think about trading, how I think about trend trading in particular. So this is Docusign, again, on daily charts. I trade pretty much exclusively on daily charts. So this is an interval, and you can select days. I like days, especially for stocks. If you're trading things like Forex, then you can trade, on hourly or whatever. But here's Docusign with a clear breakout on September 6, 2019. This is 2 years back. How do I know it was a breakout? Okay, so actually the breakout did occur a little bit earlier. You can see it was right there, actually, on 25th of April. So even though it closed below the red line is more like caution for stocks. The stop would have been at the yellow line. So I could have entered, even earlier. So for example, 31st of May, 25th of April. Final opportunity to buy was on 6th of September, and that was a huge gap. I mean, look at the size of this gap. This is a 21% gap at the open. So at this point in September, you bought this Docusign thing, and I keep saying that it really makes very little difference what it is that you're trading, so long as the pattern is correct. And in this case, the pattern is very much correct. We want to see strong move upside to the upside. And at this point, it just took off. Significant move higher. So if you can read candlesticks, and I was able to read this candlestick, I mean, I wasn't trading this particular one, but notice this advance is very sharp, steep. So I would have been probably taking profits here. But even if you didn't take profits and you just did, only the blue line, so you bought on 6th of September, you set in a position and you exited right there on the 17th of March. Why? Because it closed below the blue line. Or I'm sorry, on the 12th of March. This still would have been a nice, 30% gain. And then again, you can re-enter next few days. So we got a bottoming pattern and then re-entry. You can re-enter, for example, even the next day, literally. Some people never exit and they just sit in a position. I think it's a little bit dangerous because we don't know if it's going to continue lower after the support break at the blue line. In this case, it didn't, and then 13th of March of 2020, it continued to take off, and I mean really took off. Again, this spike, I would have been kind of questioning it, and most likely I would have exited at least partially here on the 3rd of September. But even if I didn't, I would have exited right there on the 11th of September of last year. So that's a 174% gain. And all you did is just look at the lines. You looked at the line on 13th of March, and then you looked at the line again on the 11th of September, and you got 174% gain by looking at the lines twice. Then a few days later after that, on 22nd of September, there was another opportunity. And it's still continue. I mean, another opportunity to buy here, maybe on 13th of November rather. It still continued, and you would have made decent money. At the very least, you would have been, broken even. Latest couple of opportunities you can see were literally right there on 9th of March and then just recently on the 13th of April. So we will see if this is it and if it's going to continue higher from here. There is absolutely no way to tell. And even though some people claim that they know things about how the stock will behave, I strongly disagree with them. I don't think there is a way to know how the stock will behave in the future. We're only basing our projections on what happened in the past. So in this case, we got 1, 2, 3, 4, 5, 6 opportunities to trade on the upside. Will this 6th opportunity be the last one, or will a next high will be made? No way to tell that, okay? If you know, the other thing is, for example, earnings. So we can look at earnings. So for example, here's earnings on the on the date of its breakout. It was horrendous. Do you see how bad earnings were? They were minus 39 cents per share, and yet the stock kept up. It's still losing money a quarter later. Still losing money here. Still losing money. So they're not really making any money, and yet their stock is really going higher, and I still see that they're losing money badly. The last report was minus 38. So again, I would just ignore it. Just ignore all this nonsense. There is really no need, and there is no way to, how can I put it? There is no way to use fundamental analysis in conjunction with technical analysis and make it so that fundamental research improves your trading. I don't think there is a way. I know people will claim that there is a way. I know people will argue with me, but I would like to see some studies. I would like to see some data before this argument, is put to rest. My personal opinion is I do not use any fundamental data to make a decision about what am I buying or selling. So again, it's really up to you, but I would highly discourage you from using fundamental data. Right, moving on to bond universe. Here's junk bonds. So junk bonds and stocks, I keep saying that they move together. Junk bonds and stocks usually move together in lockstep. And so right now, we're still not seeing new highs. So you can see that this was a high on the 12th of February. And for S&P, this was the high on 16th of February and pulled back a little bit and then made new records. You see, while junk bonds didn't yet make new records. So this is a divergence. I'm really hoping that it will finally make a new high, and in this case I can kind of relax more, but it hasn't yet happened. So I am not exactly, happy about it. I would like to see a new high. So far it hasn't happened. We'll see if it does, and we'll see if it means anything. So overall, if stocks and junk bonds are moving in the same direction without any divergence, it's usually a good sign. On this chart, what I'm trying to show also is the narrowing of a trading range. So you can see distance between yellow and green line was 17.59 points, and now this distance is 8.86 points. So you can see how much narrower this is. And this matters because should the junk bonds continue lower, they will have less distance to travel towards bearish levels. And where are the bearish levels? At the red line, 101.29. Possibly a little bit lower, 98.50. So somewhere around this area, probably 98.50 is where I would for sure say that junk bonds are in a bear market, because they're more like stocks. So I trade them more like stocks. Here's LQD, also known as investment grade corporate bonds. So the higher the investment grade right now, the worse they're doing. Probably because stocks are performing so much better. Here's LQD on 7th of April entering the bear market. So here I prefer to use the red and the blue line. But also notice that, again, this narrowing of trading range, it is indeed very narrow, so the distance to get to the bullish levels is not that far either. You see, they can turn around and just continue higher from here. Whereas before, to get to the bullish levels, to the bearish levels, you can see how much wider this is, the distances. So we'll see where this goes. I mean, ideally, I would like to see everything going higher, but obviously it's not possible. So I want to just kind of wait and do nothing with this particular security. I don't want to sell it short. I don't want to really buy it. I just want to do nothing really right now. Here's Treasuries, TLT, following two beautiful shorting opportunities, one on 6th of January, one on 27th of January. Beautiful move in our favor. Now we can see that the stock, or rather this ETF, has bounced. And where did it bounce? It bounced toward the weak resistance. So yellow line is like weak resistance. It already was above it, yesterday. So I'm thinking it's going to continue higher. I don't think it's done yet. So by extension, here's TYX. This is Treasury bond yield. Most likely Treasury bond yield will continue lower. So I'm thinking it's going to come down to around 1.992%. Currently 2.26%. So we're looking at a somewhat significant move lower. Will it be the beginning of a another bull run for bonds? So I have no way to tell that, but what we'll need to watch is if it bounces towards the 147 levels, the red line. I want to see what happens there. So if we see something of similar to what happened on the 27th of January, you can see there was a breakdown on the 6th of January, and then it bounced towards the red line. So at this point we would have shorted. So let's see if it does something similar. Here's TYX. Looks like it's coming down. Moving on to dollar index. Here's DXY. So not doing really good. I thought that this is it. I thought we were done bottoming. So here's 6th of January, lowest low for the move, and it did bounce significantly, but now we're seeing this strong pullback, and I feel like it's not yet done. So if we look on 4-hour charts, and this one, yes, you can trade in 4-hour charts if you are able to. So notice a couple of touches here on the 8th of April, and then again on 12th of April, but then again a breakdown on 13th of April. So right now what I want to see if it bottoms at 91, and if it rallies here. Ideally, I am short gold, so I want to see dollar gain, because dollar. Okay, so I'm gonna go to gold. Gold is priced in dollars. So if, well, let me make it XAU USD to make it very obvious. So if XAU USD, it's gold over US dollar. So if US dollar is getting weaker, as in what's happening right now, see, dollar is getting weaker since 31st of March. Gold is getting stronger since 31st of March. So what I did short gold on the 8th of March here, and you can see I'm not doing great at all. But then again, my stop is way up here at the blue line. So my stop is at the blue line, and it can still rally. Gold can still rally, especially if dollar drops. So what I'm really watching for is for dollar to stop falling, and for gold to continue falling, because I am short, and we'll see if I am correct or not. Okay, and let me take a look if I missed. Yes, okay, so oil. One more thing I want to show is oil. Light crude oil futures CL1 exclamation point on trading view. So again, this is my indicators here, and here on, let's say, just a few days ago, really, notice how wide this trading range was. 71 points from yellow to the green line. And now it's 40 points. You can see that from this yellow line to the green line, it's only 40 points. So this is a significant narrowing of a trading range. And I always worry about this type of thing, because when the lines get closer to the price action, the price has less distance to travel towards various other levels. So for example, in this case, if it travels down, it can easily get to red line, which is currently at $29-30. And if that happens, then we'll be in a bear market for oil. Right now we're in a bull market for oil. Okay, so we'll see again where this is going to lead us. But right now we're still in the bull market. In fact, I have some oil positions, oil-related stocks. And finally, I want to highlight Ethereum, because it yet again made a new record. So a few weeks ago, alert I think went out 28th of February. If it didn't, then you could have traded on your own. Previous alert, and actually I bought myself, but then I exited, was back in September. Made some money, but look how much I missed, right? Isn't that crazy? I bought it at 330, it's now at 2040. See, so again, better to sit tight. So you can sit tight, do nothing, wait for your opportunity. Okay, so this indicator is very powerful. Again, you can have the same indicators on your chart, and you only need a free TradingView account. So you can sign up on TradingView.com for free. Once you sign up, go over to MasterCharts Trading, purchase one of the bundles. So I have 4 bundles. One is trading indicators by themselves, $34.95 per month. I think it's a steal. You can trade, you can make $34 in a month for sure. I mean, you made from, let's say, 300 till 2000. That's how many percent? Let's say you didn't exit where I exited. Yeah, that's 620%. So yeah, you can afford those indicators. Trading indicators, again, I have 2 newsletters. So newsletters are Elite and Speculator. So for the Elite, I kind of follow just certain stocks and certain securities, like a fixed number of securities. I have about 100 securities in this list. Various stocks, also some forex and some gold and etc. But there's also the second newsletter I have, a Speculator newsletter. So I'm covering all of these different stocks we trade, and they're more speculative, and they're kind of a little bit more like a breakout kind of stocks. And so if you want to sign up for just newsletters, they are $49.95. If you want to do the both, so you got indicators and newsletters, and I think it's a great steal, great deal at $69. The ultimate bundle, the difference between the new indicators and the ultimate bundle is that it includes the advanced stock screener, and for the stock screener you get to also scan these stocks, these lists. So for example, American Exchange, New York Stock Exchange, NASDAQ, etc. There's many different exchanges or other lists of stocks that you can pick and choose exactly what to get alerts about. So this is the scanner, and I think it's again worth every penny you pay for it. So do sign up today. There's a 7-day free trial. You can always cancel, but most people don't, and they just stay for a very long time and make lots of money. So do consider signing up. All right, that's it for this week's recap. Again, if you have any questions, let me know. Thanks for watching. Have another great trading week. Bye bye.